Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for June 22nd, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis for the current session. Here's a look at the ES and the daily time frame. One thing we looked at before was how is price going to respond off of the previous week's high of 89s. We saw a rejection there early in the week, and since then, we've basically formed an inside day during Tuesday's market. Janet Yellen was speaking early in that session. We have Janet Yellen speaking again here in about 90 minutes, and we have a double inside day that's now building out. So the early idea was that since these market participants right here failed to get paid, the stops came out, we saw a sell-off downward. Prices then bounced back up and are seeing a little bit of a rejection here. If bulls are not able to reclaim prices back above 2089s, the expectation would be a retest back toward value at 2052 and perhaps a cross value into 2024s. So that's something to keep in mind. Here's the top of value here at 2080. Price coming back above it and seeing a little bit of rejection. If prices cannot reestablish acceptance above value, the expectation would be another move back toward value ahead. So we're going to continue to watch this. Obviously, with a double inside day formation, that implies significant coiling action. Once we get Janet Yellen out of the way here with her testimony, we could see some sort of expansion away from this range. Until then, we could see back and forth choppy behavior. You got to be very careful. Look to fade the edges until expansion occurs. Here's a look at crude oil. Crude oil, we have our key range that's now built out here, basically 46.40 up to 53.20. You have your midpoint at 49.40. Very clear range here. Price just chopping around the midpoint of that range a little bit. Our expectation was that since this is the HVN right here, 49.78, very similar to this midpoint of the key range 49.40, we may see a little bit more back and forth trading action here between 48.50 and 50.85. And until we break free from this range here, we're likely going to see further development here with a skew to the upside. We have been trending up. We have all major key ranges that have been formed have been violated to the upside after their formation here. Very nice uptrending market that we've seen so far. So the expectation is for further strength ahead. But we could see a little bit more development here until this thing shakes out. So every single one of these major key ranges that formed, eventually they shaked out a little bit and went to new highs. Nice key range that formed, shake out a little bit here and then to new highs. So we may see a little bit more of the same right now. Overall, I think as long as price remains above that 47.75 LVN here, we should be poised for new highs into 53.40. The next actual key range or key level above will be just beyond that. It'd be 53.93 now, and that would be the key range midpoint from a prior period of time. So that's going to be the next major upside level to watch. 53.93 and also 55.53. Taking a look at gold right now, we've seen gold reject off the highs up here above the 1308s. We saw an absorption signature begin to develop here off of 1299s, and we've seen new lows day over day. That's exactly what we're looking for. After this rejection, we were looking for bears to defend a retest of 1299 to 1300. They did that. And we were looking for a move back into 1260.3. Very, very close to seeing that come to fruition already. We've hit the midpoint of the key range at 69.5, so that's important to note. But from this high to this low, we have a midpoint here at 1260.3. That would be the midpoint of the impulse range, but we have to test that before the levels become cemented. So we have to keep an eye on this level to be tested. At some point, we could see a bounce off this area and continue to develop, but once we hit this level, we now have our key levels to watch for the next major expansion move down the way. All right, taking a look lastly at the NQ. The NQ in a higher time frame shows that price continues to chop and trade below the LVN, that's 44.3475. We also have the HVN here at 89.5, and we've basically been seeing a lot of chop back and forth. So this is very, very tightly coiled price action right now. And once we're done with this range, the fuel that's being built up in here will likely spark the next key move. Again, there are buy stops above this LVN right here. So if price pushes through 44.34, 44.40, we could see a nice momentum move up back toward recent highs 45.20 and beyond. So that's something I'll keep watching for. This level has buy stops above it, given all the bears that have defended it. And if they don't get paid here, they risk being run out of their trades. Now again, this is value right here. That's 43.89 half. That's value. That is the high volume node. You can see how bulls have defended here, here, and here. One time below it. So that's a very important level too. So we're coming up to a point here where price and the range is contracting significantly here, coiling up, and we could see significant expansion. So a failure to hold 43.89 half opens up a move to new lows above this LVN right here, pushes price back toward recent highs. So we're going to continue to watch for development. We have a double inside day here, another day of Yellen testimony, and once that's out of the way, we could see some significant expansion from this range. All right, that's it for now. Nothing really to do. We're just watching and waiting until that event occurs. All right, that's it for now. Let's see how it plays out the rest of the day. Good luck and trade well.